Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, we're coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. It's a recovery and repair over the last couple of days, and today seems like it's set up to be a good day once again. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, guys. Morning.
Good morning. I mean, it's a good-looking screen, better-looking cues. It's been a while, right? So let's hope we could build onto that.
Been a while where we can definitely firmly say right at the word go at 8 o'clock in the morning that I think it's going to be a good day. So let's see. Is the gift Nifty telling us something else? I don't know, but we'll have that coming up in just a bit. Now, let's just take it from the beginning because there is a fair bit to cover. President Trump granted the first tariff exemption that came in last night. And there were indications of it through the course of Asia session. Actually, there were indications of it in the prior US session. So 1 month exemption for autos in Canada, Mexico. And of course, this basically essentially opens up the door. The markets are hopeful that other tariffs can be negotiated as well. If this can be negotiated, why not others? And I think the markets, by the way, equities in the US did not immediately react to this, but then eventually they did. The Nasdaq ended about 1.46% higher. The S&P was higher as well, about 1% plus. The dollar is the bigger story. The dollar index, the broader dollar, continues to fall, and it fell another 1% plus to about 104.3. And in the last three sessions, the dollar is down 3% in three sessions. That is humongous. That's a very large fall from 107.5 to 104.3 last night. I mean, it's one of the fastest, sort of quickest climb downs we've seen in the dollar at any point. I think you had to go back some distance for this kind of price action. Oil is the other one. I mean, yields 5 down, 5 up, so I'm not spending time there. But oil prices down 2.4%, and we're under $70 a barrel as far as Brent is concerned. I think WTI is about 65. So we are basically in the 60s handle. And for a big oil importer like India, this is definitely very, very good news in that sense. So, you know, we'll, of course, with our research team, talk about which stocks and sectors, etc. But some are, of course, obvious. And we saw a glimpse of that even yesterday. Now, US ISM Services Index improved 53.5 to 52.5 in the month of February, despite tariff uncertainties. Remember, I always say services is the more sticky part of the economy anyway. And the fact that that part in the US is holding strong, it kind of runs in the face of some of the other high-frequency data, which we've seen, which has actually come in a little weak. The other big story, of course, is out of Europe. European bond yields surged 25 to 30 basis points yesterday. It's the biggest one-day move we've seen since 1990. German bonds went up about 25 basis points. And, of course, the differential between, bonds and bonds in the US, that sort of, climbed and massively to about 27, 30 odd basis points or so. Markets essentially saw Germany's whatever it takes moment last night. Remember, we've recently had elections in Germany. And the campaign, etc., from people who won, who are in power, CDU and other parties, has been that, we're going to stay the course. Maybe we will spend a little bit more, but nothing dramatic, nothing drastic. But what they did yesterday was a U-turn. It's a massive U-turn. So they're saying that they're going to spend big on defense. They're going to spend big on infrastructure, not going into details, maybe a little later. It's a massive U-turn, as I said, on fiscal, defense and security policy as well. And, the ironic thing is the German head of state yesterday used what Mario Draghi used, the phrase Mario Draghi used 10 years ago. He said, whatever it takes. Back then, the highest the highest German court actually had stepped in and said, well, they ruled against what Draghi was trying to do for the EU. Of course, it was eventually overturned, but it's ironic that you got the head of German state now essentially coming in and saying whatever it takes. That phrase, I think, is what really took the markets by surprise. By the way, today, European leaders are meeting in Brussels today. Zelensky is expected to attend. And of course, this will tie in with whatever we see on the Ukraine front, whether we'll see some sort of peace announcement, etc. Europeans seem like they want to fight. US, of course, is forcing Ukraine to come to the table and negotiate and end the conflict. Just to sort of tie in the levels, etc., Nifty's, of course, snapped its 10-day losing streak yesterday. And large caps did well, etc. There was one sector which did not do well was financials. Financials is a space underperformed yesterday. The RBI, after market hours, announced more liquidity infusion, more details in a bit, positive for that space, for financials. But I think for the broader market as well, if it is positive for financials, the Nifty, in terms of levels, ended above the 40-hourly exponential average, the level we put out yesterday, just marginally, 20 points above that level. The next targets here are, I mean, you basically, you got to track the fall and then the levels where the Nifty halted for a while. The lows, 22,500 and then 22,715 are the next two levels on the way up for the Nifty. Nifty Bank also closed above the 40-hourly exponential average. It needs to get past the 48,550 level. And of course, I mean, the recent lows should not come into view if this has got to play out from here on. GIFT Nifty will give you a sense of how we are likely to start. You know, leverage in the system is low. There are shots built into the system. Positioning is pretty clean, and you got this positive macro setup. Yesterday, weaker hands got out. The question is, today, will stronger hands buy the market? And I think at the margin, perhaps the answer is definitely yes. Nigel.
Well, it's been a while since we have had such positive cues, right? The Dow ends higher. The ADRs as well were higher overnight if you look at the banking names that trade. And, you know, this sort of positivity, after a while, we're waking up to. And as you said, the RBI, well, they are managing the liquidity front as well. Let's get to the top cues, though. Yesterday, the Nifty broke the 10-session losing streak. Great, right? Because that's the first time in history, actually, that we saw the Nifty ending down for close to around 10 straight sessions. And, you know, we have some data points coming in from Samco. They say that since 2002 onwards, the Nifty has been on an 8-session or more losing streak for close to around 9 times. But 6 out of the 9 times, 1 month down the line, we're actually higher. And we're higher by close to around 2.6% on an average. That's the data point that's coming in there. So we've had 10 sessions on a losing streak. In February, 90% of the days, the Nifty was in the red. That's 18 out of 20. So some kind of positivity, that's good to hear. Let's see a few more data points then. The dollar index at multi-month lows, Brent crude prices below its 52-week lows, and you have the US yields as well that are more or less steady. In the last few trading sessions, the FIs, yes, they're net selling, but the net sell number has come down from sub 5,000 crores to sub 4,000 crores to sub 3,000 crores. With this sort of a backdrop, today I'd like to see a number sub that 2,000 crores, and the FI selling needs to get a little bit lower. That's what will help our markets. In yesterday's trading session, it was a good one because we ended virtually at the high point of the day, and there was about a short covering that we saw both on the Nifty as well as on the Nifty Bank. The open interest was low. And just take a look at the net short positions of the FIs. They're well and truly net short on the index, but it's come down marginally. From around 85%, it's come down to sub 83% or thereabouts. So there's a lot of shorts in the system, but at least some tapering down of shorts is what we've seen both in percentage as well as in absolute contracts. On stock futures, this is interesting, right? Because they have been net long on stock futures, but now on the stock future side as well, the shorts are on the system. For the last 2 trading sessions, they've actually closed out close to around 26 to around 27,000 contracts. That's another positive sign as well. So though the FIs are selling in the cash market, the futures data could suggest that they could be getting trapped on the wrong side. We'll see how that plays out. The margin trading book. You know, just a few weeks ago, that number was close to around 80,000 crores. That number has come down to around 69,000 crores or thereabouts. That's telling you that the leverage in the system is relatively lower, and you like this number to stay at a lower level. Remember, this is subject to change, and we get it with a bit of a lag, but that's another important data point. The leverage in the system seems like bulk of that margins, margin trading has got cleared out of the system, which is good news. Today is the Nifty expiry. Remember, it's Thursday, so we'll have a weekly expiry that will play out. The 2 strikes that are most active, they come up for you on the screen. And just punching in the premiums and looking at the technicals, the important mark to hold out. For today, the 22,150, that should not hold out. If it's going to be a good trading session, we should get past the 22,450 to around the 22,500 mark. This is where there is some resistance. Sectors that I'm looking at, 2 of them. The dollar index has cooled off. The metal index could be in focus, because you have LME prices that are moved up. So that's possibly the sector of the day, though it's pulled back. And OMCs I'm going to be looking at because remember, they have good amount of dividend yield in there. Valuation-wise, there is some support. Crude oil prices have cooled off, which is good for them. Marketing margins, I was looking at a DAM note. They are saying that they're working with marketing margins of around 4.5 to 5 rupees per litre for the next year. And as of now, it's more than 8 rupees. So these stocks that have rallied in the last couple of sessions, they could be in for more. We'll keep an eye on them.
Okay, all right, great. We absolutely will. And it's a largely good backdrop, green backdrop across Asia as well, because most of those markets are trading higher. And the Japanese market is, rejoicing the fact that at least for some automakers, for at least a while, there will be some relief with respect to those US tariffs. So, and the Hong Kong market was so strong yesterday as well because of the kind of GDP growth targets, the deficit, increase targets that China had put out. And more of that is continuing on Hong Kong this morning. By the way, in just a bit, so everything is positive, except one new development that our colleague Parikshit is going to talk about very, very soon. You remember, we told you this on Monday morning that the US Commerce Minister, Mr. Piyush Goyal, has been spending a lot of hard days and nights with parlays in the US. He's been in the US all week to try and get this trade deal going between the US and India. Guess what Parikshit's sources are telling him? That the US perhaps is not in much of a mood to relent. So that's a teaser. He's going to come in and talk more about it. And of course, you would have heard a lot of the reports about Tesla rolling into India. And there's a showroom being set up in BKC right here in Mumbai. The question is whether Tesla is going to come in at zero duty. Will Tesla be allowed to come and sell their cars at zero duty? That's something that we really need to look out for. But reports are indicating, that BKC is going to be the place from where Nigel can buy his first Tesla. Okay, I think we'll debate that as we go along. Yeah.
Most of the money is going in the SIP book. A man of my word.
He's a sensible, family man. Okay. All right, let's move on then to the equity calls of the morning. We've got Mahesh Nadulkar of Jefferies saying that India's underperformance relative to EMs by 21 percentage points in September 24 has brought its relative valuations against the MSCI emerging market to the 10-year average. Historically, he says, from such levels, Indian markets had bounced both in relative and absolute terms. He adds that with the dollar index down 4% from the peak, FPI flows might turn. He says their FPI ownership tracker indicates that India's positioning by EM funds is at a decadal low. He says near-term positives such as economic uptake, liquidity easing may lead to a near-term bounce.
All right, Samir and Chakrabarti of Citi says that they estimate that durable liquidity remained in slight deficit on February 21st, and in line with their expectation, the RBI has announced further 1.8 trillion rupee liquidity infusion. He says the overall quantum is higher than their estimate, as the RBI might be aiming to replace some of the 1.8 lakh crore outstanding VRR that are maturing in early April. He estimates that durable liquidity would now move towards 1.2 lakh crore surplus by end of March. He adds, including outstanding VRRs, liquidity surplus could be near 3 trillion rupees now. A dovish MPC minutes, downside risk to growth from trade wars, likely below 4% February CPI, front-loaded macro-prudential easing and liquidity infusion support their view of at least 225 basis point rate cuts in April and then June.